Welcome back to European Closing Bell. We'll get technical now. Thomas Nagel is a trader over at Equinet, and he joins us now. Now, Thomas, I don't know if a small child has got hold of your charts, but you might have to explain to me and the viewers this US market strength chart. It's very busy. Tell us what you're suggesting here.
Yeah, hi Anna, nice to be back here in your session. And what you here see is the relative performance graphs of the Russell 2000, of the Nasdaq 100, of the Nasdaq Composite Index, and of course of the Dow Jones Transportation Index against the S&P 500. And what can we see here? We see that all of these three really important indices are still in bull mode. That means we are outperforming the whole market in the United States, and that's, in my opinion, a really positive sign. That was the reason why the US market doesn't collapse on the downside within the last days and within the last weeks. But of course, after this strong outperformance of the last weeks, there's a possibility, a small possibility, for a correction, of course, and that's worst case could be in play now. And so let's see if the strengths of the US markets within the last days will be changed to something like a correction.
Okay, Thomas, let's see if the banking index, US banking index, is a little easier for me to understand.
Yeah, you know, biggest problem of the whole markets to US banks. Here the banking index itself, you see the graph of the last 10-15 years. And in my opinion, it's really important. 2 weeks ago, we spoke about the really important level of 75. That level was broken 2 days ago. And within the last 2 days, we was down 10% only in this index. And you know where the pressure comes in the US market. But now the index is in the next, at the much most important level I ever saw. And that's the level of 67. You can see that was the low of 1998 to 2003. And best case, we are seeing something like an overshooting within the next days. But worst case, if we see a clear break of this 60-70 level, in my opinion, that will be a sign that the whole financial system will be collapsed. I don't think so. I don't think that will happen. But worst case, we have to know what happens in this worst case, of course.
Let's hope not. How much of this translates into Europe then? You've got the DAX for us as well, DAX Future.
Yeah, correct. That's my lovely baby, I told it. It's a DAX future contract. You can see the performance of the last months. You see this up move from 6174 to 2270. And today's low, the DAX future touched the 50% level of this up move. That means it's something like a correction at this moment. And really important is you can see it in March. The lows were accompanied by really strong volume. And within the last days, we see another acceleration of the volume, something like a spike in the volume. And in my opinion, that's a good sign that we are ahead of something like a low here, around of these levels.
Okay, and if we have a look at a DAX volume chart, what does that tell us?
Yeah, that's really important in my opinion, because within the last days you can see that the volume in the DAX future contract is only playing on the downside. That means you see the lower line, this red line, that's the moving average of the last 21 days, and you see the yellow line, that's the line from yesterday's trading session. Yesterday we have a flat session, and the volume was something was in average like the last 21 days. But within the last 5 days, when the DAX future came down sharply, the volume was accelerating on the upside extremely, and that's, in my opinion, a sign the whole market is reflecting only the downside, is only playing the downside, and I never saw a high in the index with down volume on the upside, and in my opinion, that's something like a sign for a low here at these levels.
Okay, Thomas, great to hear from you. Thanks for coming on. Thomas Nagel joining us from Equinet. So let's get an update on our headlines.